Hey traders, so what's the best approach to actually grow your personal capital? I believe for majority of you watching my videos, you have less than $10,000 in your personal trading account. And not everyone is fortunate enough to be able to put in 50, 100 or a couple $100,000 into a personal account straight away. So even for me, when I started with less than 3,000 Aussie dollar, and I was able to turn that into over $1,000 within 1 year. But was that repeatable? No. At that time, I was actually gambling the market. When I really became profitable after my third or fourth year, that was really when I started making six figures consistently. So referring to two P&L screenshots here. So these are screenshots of one trader, also my mentee inside our trade club. So he was able to make, if you see here, the realized P&L, $240,000, and the realized P&L here for about 61.2K. He was able to make over $300,000 within 2 to 3 months period, purely focusing on this one key advice, which is holding onto your winner longer. And this is a common problem. Traders always think, for me to make more money, I need to focus on my trade frequency. I need to focus on how can I be correct more than I'm being wrong. And I'll tell you, most of the elite traders, they couldn't care less about being wrong in the market. They couldn't care less about taking a few losses here and there. It's all about taking calculated risk. So from here, it might seem like everything's green, is all wins. No, there were losses as well, obviously, just on top of the P&L. But using one of the very good example here on Pound Aussie. So he shorted Pound Aussie because he saw price had a rejection, had a big failure here at the intermediate resistance at 207.30. And this is based on one of our strategy, which is a TPF. So TPF is trend pullback failure. Trend pullback failure means we're looking to hunt key fake up pattern around a major level so that we can look for a lower high formation, or basically trying to hunt so-called the right side of the V entry. So he entered the trade after seeing price has faked out this intermediate resistance, combining with the overall context, the overall market condition, the behavior of Pound Aussie was ranging. So after seeing that big spike on the higher time frame, he was able to tell that, hey, we faked out the key level and high chance we're going to revisit back at the major support at 202.68. So that was the key reason why he decided, hey, that's my trade idea, I'm looking to sell. So he took the short entry after seeing price do a TPF. So TPF is basically just like a head and shoulder. I can't go through all the details of this specific strategy because there's a lot of lessons. So we have left shoulder head and a right shoulder. So price basically formed a TPF plus a BNR here at 206.42. And that was the exact reason why he took the short entry. So he took the short entry after seeing the breakout, the TPF, and what he did was he basically just added into his winner. So he added into the position after seeing the pullback, add on to more positions here, and just hold it all the way down. And that's the key essence about mastering the art of how can you become more disciplined and actually stick to a winning trade idea. Most people think, oh, in order for me to make more money, I need to trade more. And that's wrong. You don't need to trade more. All you need to do is you focus on the highest quality setup with the best possible price position, like this Pound Aussie trade. Focused on key level entry, ignore minor level entry and noises, and just try to be patient. And there's one key tip I have for all of you to hold on to a trade longer is to do your trade management on a higher time frame. So if let's say your entry time frame for majority of you, I assume is probably 30-minute chart or it's probably 15-minute chart. If that's your entry time frame, when you're managing a position, go to the 1 hour. When you're managing a position, go to the 2-hour chart. The problem really comes when you're getting caught off guard is when you try to manage a position on the 50-minute. So I'll give you one example. He took the entry based on such a good price position, and he was able to hold it all the way down because he was sitting on hands. Imagine if he were to sit there and staring at the 15-minute chart, tick by tick. Do you even think if it's possible for him to hold it all the way down? No. After seeing the sell-off here, for example, on 22nd of October, when price retraced deep all the way from 204.75 to 206.14, he could have closed the trade. Why? Panicked. He would have been panicked and just closed out the trade out of impulsive behavior. But he was able to hold through them. Why? Because once he started getting into the position, once it ticked off the price position criteria, once it ticked off the overall setup rating, he basically just hold on to the winner. And that's it. So he did not sort of interrupt the position. He did not go down onto the lower time frame to micromanage the position. But in fact, he go into scale in. He was looking for areas where he can conservatively add on to more position, more sizing into the winning trade idea. And let me tell y'all, my best trade was $500 over $1,000 on dollar yen short. And it was all documented on my YouTube channel as well. So how was I able to capture that kind of P&L, the 500k trade on dollar yen short? I was basically just holding on to the winning trade idea and I just add on to it. And what I did was I had a smaller initial size. It could be 100 lots on the first attempt. Sorry, but yeah, my minimum size is about 50 to 100 lots. Once it starts going into my favor, I basically just skilled into the trade. And that was how I was able to make money. And I strongly advise you all, if you are an aspiring trader, or if you're someone who's been trying to grow a personal capital, but you keep having the problem of growing, let's say, $10,000 to $30,000 just to bust the account, or you grow it from $10,000 to $100,000, I'm finally breaking the 6 figures mark, and all of a sudden you're seeing deep pullback. That's because you have a high trade frequency. That's probably because you got lucky on one trade. But the main thing is it sustainable or not? The most sustainable way to consistently generate high P&L figure, or to consistently compound and grow your personal account, is actually to trade less and be more selective and just focused on setups that offers good price position, and just hold them, skill into them, and that's it. But of course, everything has pros and cons. It's double-edged. If you don't know how to do a proper skilling model, you probably would have killed a lot of your winners as well. Because skilling into a trade also means that when you are, let's say you're up 5R, price retrace to 3R, you're looking to skill in. But if let's say you're not doing it correctly, so assume, let's say today price is going up. From this point to this point, you're up probably 5R. When price retrace into 3R, you decided you want to skill in 50%. So once it retraces deep and it proves you wrong, you're giving back a lot of profit. You're probably going from the peak, which was about 5R, all the way down to negative 1R. But that's the downside. The upside is there were times where you skill in. Again, it really depends on how aggressive do you skill into your trade. For me personally, I don't skill in more than 30% of my initial sizing on any single skill in. So let it be the first, second, third, fourth, fifth skill in, whatever. They will never exceed 30% of my initial size. If you want to have a skill in that's 50, 70, or 100% of your initial sizing, for me, that's too difficult, because there will be plenty of times where you actually sacrifice your initial price position. So some of you may not know what's price position. So by sacrificing your initial price position simply means, let's say you're entering at a major support and your bet is, I think price is going to go from point A to point C. So when price go from point A to point B, you decided this is your initial size. Let it be 20 lots. You got a little bit cocky. You said, let me skill in 40 lots here, because you expect price to continue moving for probably another 300 pips. But guess what? If price starts retracing really deep, because your sizing here is 40 lots on top, that means it's double your initial sizing, your average entry price or your average price position has now gone from such an A+ level to possibly here. Possibly here. So you can imagine if price just pull back a little bit, immediately all of your profits vanished. So you don't want that to happen. But if, let's say, different scenario, you have 20 lots here. When price breaks above the resistance, you expect price to run into point C on top. You decided to scale in only 5 lots, which is about 25% of your initial sizing. If price retraces it, even if it comes all the way down here, you're still in the money. You still make money. And if it eventually go up, you have the potential, you have the confidence to hold on to the trade. And that's why I say, as much as at the beginning of the video, I keep telling all of you, scaling into your winner, holding on to your winner is the best way to grow your personal capital. Again, take me as a testimonial, as a live testimonial. Don't take some of my traders, my mentees, because some of you might say it's not real, blah, blah, blah. But use me as an example. I was someone who came from 4 figures, a couple $1,000 into right now multiple 7 figures. So if I can do it, you should be listening to me, because I've tested a lot of things. I've done a lot of trials and error. I've done a lot of forward testing, back testing, different methods, including higher trade frequency model, lower trade frequency system, including lower RR, have a static TP, blah, blah, blah. But eventually I still realized when you trade less, you focus on high quality setup, good price position. Price position is the key advantage we have as a retail trader. So when you focus on some of these key elements, they just take off a lot of the headaches. And yeah, I hope you all learned something new from this video. If you like it, please don't forget to like, share, and subscribe. So from now on, after this video, please stop taking 30, 50 trades a week. Because again, you're not going to make as much money as a lot of traders who are being more focused and more selective. I know some of you scalpers, you might disagree with me. I'm not here to prove I'm correct. I'm not here to say you're wrong. I'm just trying to share a method, an approach, a system, a model that has been proven to work, at least for myself and for 400 other traders inside our trade club. And that's it. And I'll talk to you later. Bye-bye.